Global consulting firm PwC is out with its annual report on mergers and acquisitions, deal making. And it's not only looking at the trends that define what was a record-breaking year for deal making overall, but also what may lie ahead. Joining us now is Colin Whitmer. He is deals platform leader at PwC. Colin, we appreciate you coming on because I don't know about you, but all my buddies who are in either private equity or attorneys for private equity, I can't go out to dinner with them, going back to our previous topic, because they're simply too busy doing deals, and your numbers back it up. I mean, the amount of deals has been staggering. Tell us about it and what you expect for next year.
Good. Hey, Brian, thank you for having me back. It's good to see you. You are right. It is unprecedented in terms of the amount of activity that we're seeing. We're as busy as we've ever been, and the entire M&A ecosystem is the same way. As I reflect back on 2021, it was unprecedented, as you said, in terms of both volume and value, for a couple reasons, right? One, the technicals were good. We have GDP growth. We have corporate earnings growth. But you step back and you look at coming out of COVID, companies needed to do two things. One, they needed to transform. There was a longer-term trend towards getting companies being more digitally fit. That trend accelerated coming out of COVID. And then as you think of their supply chains, there was a lot of deals that got done because coming out of COVID, they needed to have a more resilient supply chain. So there was the technical factors plus a real push coming out of COVID for people to transform their businesses.
Yeah, and I remember reading the great book, Barbarians at the Gate. If you remember that, Colin, I may be dating myself, about KKR's takeover of Nabisco at the time. I think it was the biggest deal ever at the time. Seems quaint now. And there was a line in the book where basically Henry Kravis of KKR was saying, why do a small deal? It takes the same amount of work as a big deal, and you can make a lot more money on the bigger deals. It apparently, and I'm summarizing, people listened because the number of what you call mega deals over $5 billion is what, 29 more this year than the next biggest year. It's crazy.
Yep. When you look at it, and you look at just 2020 versus 2021 on mega deals, it went from 54 to 99. So quite a substantive jump. So, and we define a mega deal as greater than $5 billion. But the other interesting trend that underlies that, if you look at what we're calling the not so quite mega deal, so a deal from 500 million all the way up to 5 billion, those increased substantially. They used to be between 400 and 500 a year, and there were 800 this year. So reason for that is, for some companies, a mega deal plus 5 billion is just not within reach, or the competition for that asset is just too great. So what you see them doing is piecing together smaller, although quite substantive deals greater than 500 million in order to piece together the capabilities that could have been a mega deal. So we saw a lot more activity in that space this year.
Interest rates should matter, right? If money is cheap, you buy companies. By the way, for our viewers, they think this is mysterious. It's not. The same reason they refi their home or buy a car when rates are low is the same reason that private equity does. If the money is cheap, you got to put it somewhere. You can't make money just sitting around. If rates tick up a little bit, Colin, because nobody's saying they will a lot, will that slow it down or maybe just trim the party around the margins?
Right. I think it's the latter, and there are many factors that impact M&A. But if you think of the ones that are still very positive, you've still got GDP growth, you still have good corporate earnings. Yes, interest rates will tick up debt. I think the Fed, I was just watching their show before this, saying that they might do as many as 3 interest rate hikes this coming year and a couple the next year. But where that lands in the history of M&A is still a very low interest rate. And you're right, private equity is an incredibly important part of the market. And if you just look at the numbers, now they're up to 37% of the market. 2 years before that, they were 28%. 2 years before that, they were 24%. So their tremendous amount of liquidity is having anticipated in a big way.